Welcome to Investors Insights. Our topic today is 3's a charm. There's a reason we chose that title. The 10-year Treasury is bumping against 3 and may hit it today. As interest rates go up in the bond market, yields, then we look and all of a sudden people start to contemplate, can stocks maintain their growth, or is the dividend yield on a stock as attractive as what I can get in a 10-year Treasury, correct? Everybody agree with me?
Yes.
So there will be a big debate this week, as well as probably more volatility in regards to that. But there's a race going on here. The question becomes, will interest rates win because they're moving up, or will corporate earnings win? And Bobby, you talked about in our meeting this morning. Talk about
We're in the middle of a great earnings season. So far, 80% of the companies that have reported have beat expectations. Historical norms are about 55 to 65%, so being at 80 is really positive. In fact, one good point I want to make here is 4 out of 6 companies have outperformed on sales. That's really good. That's a lot better than we've seen.
Sales are huge because companies seem to be able to manufacture earnings beats year after year, and sales haven't been great. We haven't seen sales in years move
right. It's always been cost cutting.
Exactly, cost cutting. That's not really economic growth. Sales, now that's the economy.
And that's great to see. But despite all these positive results, stocks have done nothing. I mean, this has been kind of flat, and so this week is huge. 179 of the S&P 500 report earnings.
Right.
So if that continues to be to 80%, the market needs to move favorably here.
Sure. Well, and we need to see some more benefits from the tax cuts, repatriation. We need to start seeing that as well.
Yep.
So, and you go ahead and talk about, because we got in a big debate this morning, so I want to continue that debate.
What's interesting is at the end of the week, we have GDP, the first quarter GDP. Right. And while this is an often revised number, the first number, the headlines kind of take it and run with it. So we're watching it closely because, again, that 3 number comes up. People are looking for 3% GDP growth. Right now, the estimates are 2%. Right. But when you see sales, companies, GDP is just a combination of all the sales and consumption in the U.S. for the first quarter. Well, that's what the companies are reporting. And so companies are reporting great sales numbers, great earnings numbers, and we're expecting a mediocre GDP number. So that doesn't really make sense. So we may see...
Something's got to add up.
Exactly. Right. We may see a surprise to the upside. The downside is we may print 2%, and then in a month they revise it up to 3%. But we'll see. But that's what we're watching very closely on Friday.
Right. And in addition to that, in a previous vlog, we talked about the Fed. And, in that vlog, we talked about one of the things causing volatility and in comparison to stocks is the fact no one really understands the Fed. It's all new players. Jerome Powell as chairman, they're like, what's his philosophy? Is he hawkish? Where does he stand? And interest rates going up. Ashley, you brought up some good points that the Fed team is starting to come together and everybody's starting to have a better understanding of that.
They are.
Talk about that.
Greg is right. First of all, you've kind of got the number 2 guy nominated, Vice Chair of the Fed, Richard Clarida, who teaches at Columbia, but has a lot of financial Wall Street experience too. He's highly regarded. They feel like he will be a great fit with Jerome Powell. His academic background is more shock to the financial system that a lot of central banks around the world, his modeling they use. Sure. So he's deep and wide in terms of experience. That's one, and that's sort of the main one. The second one is Michelle Bowman being nominated for the spot that addresses community banks. That seat's been open since 2014.
Wow.
She's also highly regarded, currently as the Kansas State Banking Commissioner, has also been in industry as a senior exec for community banks, but she's well known as being business-friendly, light touch, regulatory-wise.
But community banks are key in terms of lending to small businesses.
Absolutely. Getting liquidity in the system. It's a major way it goes in the United States.
And there's a rippling effect across the board, regardless of what size those corporations are. They're all borrowing money, hiring people, generating sales and product. So the data is coming at us at light speed. We're watching these interest rates closely. And in addition to that, we're going to keep you informed. We appreciate you inviting us into your home and your office and listening to this vlog as well as sharing it with others. So we hope you have a great week. We'll keep you updated because it's not going to be dull. Thanks.